In this presentation, we will discuss other types of income related to income tax. So these are going to be kind of more unusual things that we don't see all the time that we want to categorize in other income. With regards to the income tax equation, we're going to still be up top. We're on the income line, the top line, the revenue line, the income line. Other types of income includes prizes and awards. So if we get some kind of prize and award, we typically may have to be including that in the income unless it's going to qualify as something like a fringe benefit type of award from like our employment or something like that. Now, oftentimes if you're going to be over a certain limit, you will still see that you'll get a 1099 for that or some type of documentation, possibly a W-2G as well. Because again, the objective of the IRS would to think they want to pressure the payer. So if someone's going to pay someone else a prize or an award, they would like to get a deduction on it. So the IRS would like to pressure them to force them to tell them who they paid the prize or award to in order to provide the 1099. So it might be the case that if you get a prize or award that you might have a 1099 related to that, and that would be easily reportable that you would see that. But the general rule for income taxes is that everything is basically income if you received it, if it's kind of income to you, unless stated otherwise. Remember whether or not you get the 1099 or not. Jury duty, forgiveness of debt. This is one that often people get kind of confused on, the forgiveness of debt, because they're not actually receiving income or we're not actually getting money in that case, but we're getting, the debt is going down. So that's basically equivalent. That would be like us getting money and then paying down the debt with it. If the debt is just forgiven, that would be equivalent to those two things happening. So a forgiveness of debt is basically the same as receiving money for all practical purposes, because your balance sheet position has improved in that case. So insurance proceeds in excess of adjusted basis of the property. So in that case, if we're talking about insurance, usually if something is damaged and it's insured, then anything that we're going to get in insurance that replaces the property that we had, you would think would not be included, because that's not going to improve your position. But in a type of situation where the insurance is over and above what the replacement property was or the property basis, then that's a case where you might have income. Gambling winnings. So if you had, say, gambling winnings, you still might get not a 1099 in this case, a W-2G, but you still might get some reporting form on it. So you can imagine if you're at basically a casino or something like that, and you won over a certain amount of money, then the casino would be pressured by the IRS to issue you a form, in this case a W-2G, in order to report your gambling winnings. And so you would take that form and it would be fairly straightforward that you had income because of that documentation. Now, if you were under a certain limit, then it may be the case that you don't get the W-2G and should still be reporting the gambling winnings. Can you report gambling losses? If any gambling losses that may be allowable are typically not going to get the same kind of benefit at all, because you can only basically deduct them up to the gambling winnings. You can't go on beyond that, and they're going to be itemized deductions, which may not be something that you can take in any case. So there's restrictions to the type of gambling losses that you can take and match them up against the gambling winnings. Because if you think about a normal business, it would make sense to kind of take the gambling losses, because if you think about business income, the expenses that you incurred in order to generate that income are usually the types of expenses that are allowed. And if you have gambling winnings, it would be reasonable. You can make the argument, well, if I'm gambling winnings, I should be able to take the expenses that I had that helped me to generate those gambling winnings, and those would include the gambling losses, which usually would be a lot greater than the gambling winnings over a long period of time, if the gambling is something like a casino. But obviously the IRS doesn't want to incentivize gambling as a business, so they will typically the deductions are going to get related to the gambling are going to be a lot less in value typically with relation to the actual winnings that you're going to get from them. And of course, again, the IRS is going to try to pressure the casino to give you this information to report the income to both you and them, because the casino is going to want to take the deduction for the gambling winnings that they then paid out, which are expenses to them. So if we're looking at the first page of the 1040, we're focusing here on line 7A, which is other income from Schedule 1. Therefore, the detail will be supported on Schedule 1. Here is Schedule 1, line 8 has the other income. So here's the other income line that would then feed into the front page of the 1040. This is going to be on Schedule 1. Next, we have jury duty. So if we have jury duty, we get that usually a fairly small amount of income, but we still have some income, right, from the jury duty. So here, that's reported here on 7A. We have the other income from Schedule 1. We have the $50, and we're going to pull over then to the Schedule 1, and that's going to be in the other income, the jury duty. Now again, jury duty, we should get some kind of documentation related to it. So it should be fairly straightforward that we've received the jury duty for it, and then we can go in and enter that information into our system.